for joining us.
My pleasure. Thanks for having me. I'm a big fan.
Absolutely. Well, Johnson, I don't want you to feel a lot of pressure, but our audience, they're looking for stocks which have that 10x to 100x upside. So we need you to tell us what's happening with Peak, introduce us to the story, and help investors understand this is going to be our next 10 bagger. So with that said, what is Peak all about? What exactly do you do?
Okay, I'll try not to let you down. Everybody knows, Jack, that if you're going to try to get a loan, you have to be prepared to provide some information, right? So if you're a small business and you're trying to get a loan, you have to be prepared to provide some information, sometimes a lot of information, right? So the lending institution will ask you for your financial statements, how long you've been in business, do you have any debt, blah, blah, blah. And hopefully you comply, you provide the information, and you cross your fingers, hoping that the bank or the financial institution comes back with a positive answer. Unfortunately, what ends up happening a lot of the times is that the small business owner gets turned down, and they have to start the process all over again. Sometimes with a second, a third, a fourth financial institution, until they either get a positive reply or they simply give up.
It's very, right? It's very difficult. I mean, I'm sure we got a lot of people who own businesses in the audience. For a small business, I mean, it's really very difficult to get a loan. I mean, banks only want to lend to people who basically don't need the money. That's the model. So.
Okay, that's exactly right. So on the other side of the equation, you have the banks, right, and the lending institutions, and each and every one of them has their own lending criteria. Right. So first of all, the banks, as you mentioned, they don't want to lend. They don't want to see small business owners knocking on the doors asking for loans. Right. So that's not the core business of the banks. They're in there to collect fees, charge service charges or whatever. But on the rare occasion, sometimes if a small business owner fits into the specific criteria of the bank, they will lend to the small business. But unfortunately, what ends up happening, because they have such narrow credit criteria, oftentimes it's a waste of time for both the bank and the small business owner. Now, other than the banks, you have lending institutions who exist solely for the purpose of lending. Now, those lending institutions are totally different. Yes, they do have their own lending criteria, but if they don't lend, they go out of business, right? So they're out there pounding the pavement, trying to find the right business, the right small business to lend to, right? So they're out
kind of like the alternative lenders. That's the the alternative lender space, right?
Correct, right, exactly, right? So those lenders are usually more aggressive than the banks, because as I mentioned before, they have to lend, right? That's their sole reason for being in business. But unfortunately, they too end up wasting their time because they have specific lending criteria. And if the small business does not fit that lending criteria, then once again, everybody wastes their time, right? So essentially what the commercial lending space is like is you have, on the one hand, you have the small business owners just kind of like groping in the dark, trying to knock on several doors, trying to find the right fit. And on the other hand, you have the financial institutions that are doing something similar, right? They're also trying to find each other in the dark of night, and total lack of efficiency, right? So we saw an issue there. We saw a problem there. And what Peak is looking to do, what we are doing right now, is that we're solving that problem. So essentially what we're doing.
But here's the thing, and you're doing this in China specifically.
Correct. Yes, we're doing that in China right now, but I'll get back to that later on in a few minutes to tell you our plans for other parts of the world, right? So what we have done essentially, Jack, is we've gone to these small businesses and we've told them, listen, we understand that it's very frustrating for you when it comes time to getting loans and credit. So instead of you going to 1, 2, or 3 financial institutions on your own, why don't you do this? Give us access to your information. So when I say give us access to your information, I'm talking we plug in directly into their accounting software. We also ask them to authorize us to pull data on their business from government bureaus, public sources of information, and also private sources of information, their banks, you name it. Every information that a lender or financial institution would want to know about the small business in order to assess whether or not they should extend credit to that business, we pull that information, right? So we have access to that information and we analyze that information. Now, that's on the one hand. On the other hand, we go to the financial institutions and we tell them, hey, listen, you want to lend safely, you don't want to waste your time, you want to be matched with the right businesses. Why don't you basically just sign up on this ecosystem, the Peak Lending Hub, and enter all of your specific lending criteria. If you want to lend to businesses that have a specific level of profitability, that generate a specific amount of revenue, you name it, right? So you can have your lending criteria as broad or as narrow as you want. So you enter this information and the platform takes care of everything. So what we do is we have the information on the small businesses. We pull that information, by the way, in real time. And so we're able to have a trend analysis component that a lot of the financial institutions are not able to have if they're just basically getting static data on the businesses, right? So our system is dynamic. It's in real time. We're able to calculate cash flow conversion cycle, debt coverage ratio, anything that the lenders would want to know. We automate the process. We have the data to do it, and we do that in a fraction of the time. And what the end result of that, Jack, is that now if you're a small business owner, you basically have pre-qualified offers from a variety of financial institutions. Right now, we're doing business with about 50 lenders, but there are over 15,000 banks and lending institutions in China. And our goal is to eventually have all of these institutions, if not all of them, then a vast majority of these institutions on the platform. They have no reason not to.
Okay, so and how do you make money? Basically, are you selling these leads to the banks, or what's the business model?
Right. So
are you a principal lender, or what? How do you make money exactly?
Okay, so what we do is one of the attractions about the platform is we've employed the free model, right? So if you look at companies like Facebook, Twitter, or whatever, who are trying to increase membership, they offer it for free, right? So it's free for financial institutions basically to sign up on the platform, enter their lending criteria. It's also free for small businesses to sign up on the platform, give us access to their data. Everything is free. Now, when a transaction happens, right? So the small business benefits, the financial institution benefits, that's when we charge a fee. And that fee will vary from 1% to it can go as high as 5%, depending on the type of loan that is provided, that is facilitated by the platform. So that's how.
Okay, so you get 1%, 1 to 5% of the loan amount, and you get that from the bank, right? The bank pays you.
Correct. Yes.
Okay, and so you don't take on any risk. You don't take on any lending risk. You're basically just a lead generator, essentially.
We do not take any lending risk. But let me step back a little bit. Now, this whole concept of the ecosystem, we came up with this in 2017, 2018, around those parts, right? So we knew it was going to be a challenge to get the financial institutions to buy into this, right? So why should they trust our system, right? So we had no transactions, no proof of any kind to give them to say, hey, the system works, right? So what we did is in 2018, we created our own financial institution, right? So we put our money where our mouth was, right? So we created our own financial institution and we began lending our own money using them. And what happened in 2018 is that we actually generated about $1.5 million in revenue using that system. So we now had proof. By the way, we had a loan default rate of less than 2%, which is very, very good.
That's the next question I was going to ask you. So only a 2% default rate.
Less than 2%, right? So that was a key factor in getting banks and financial institutions to buy into the whole lending ecosystem that we put together.
Okay. So I guess kind of this data model, this risk model that you have. Essentially, you're able to, give lenders, give banks, some pretty decent customers. I mean, if they're, with a 2%, with a default rate of 2% or less, what kind of rates are these banks charging for these small to medium businesses? And what's the typical loan size?
Okay, they charge different rates, but these are not huge loan amounts. We're talking about loans that will go from 10,000. I'm talking in Canadian dollars here. So it's about $10,000. They can go as high as 300. That's really pushing the higher end, you know, $300,000. And the loans are typically for shorter periods of time. We're talking 3 to 9 months typically. Sometimes they will extend to about 18 months. So there's a significant turnover and the volume of loans that we facilitate through the platform.
Okay, so and what's the typical rate, the interest rate that the banks are?
Because these are small and micro businesses, the rates will go from 12 to sometimes 17%.
Okay, so I mean that's actually pretty reasonable for, you know, for that space. I mean, there's, yeah, I know in the U.S. there's some companies that are, you know, like CIT, I believe. I saw they were, I mean, their rates are like 20-something%. I mean, it's
Oh, no,
yeah,
that's
they have some
that's
crazy rates. I mean, there's some crazy rates out there. So, but yeah, so basically, if you're getting, so you can collect roughly 1% to 5% as your commission. So on a what's a typical loan size? Like I know you said
okay. The average loan side, you figure it's about $50,000, right? It's about $50,000 the average loan side.
So you're making like 500 to 2,500 bucks for that lead essentially.
Correct, roughly. Speaking of leads, though, let me continue a little bit on the model, right? So we went out there and we generated our own revenue in 2018. Like I said, we had about 1.5 million in revenue, but more importantly, we had data and we had the tools that we needed to convince other financial institutions to jump on board, right? So in 2019, that was, by the way, that was just in one city in 2018, in the city of Wuxi, right? So in 2019, we went with our data, our statistics, and everything else with the platform, and we started approaching some financial institutions. And with the data, we showed them how the platform worked and the statistics related to the platform, and we're able to convince a few lenders to jump on board. And these are not just banks, by the way. There are a few banks, but mostly, for the most part, they were lending institutions that are fairly aggressive in terms of their loan practices, right? So in 2019, we got a few lenders to jump on board, and our revenue went from 1.5 million to about 11.5 million. So that was a significant jump for us. And we were able to expand from just being in the city of Wuxi in 2018. We expanded our services to the city of Jiangyin in 2019. Specifically, there was a lot of demand for our services in the supply chain, right? So the province of Jiangsu is considered in China to be, I guess, like the manufacturing province of all of China. There are a lot of small factories out there, and those factories needed financing to replenish their supplies. They also wanted to extend credit to some of their clients. So the supply chain model really caught on in Jiangyin in 2019, and that helped us generate about 11.5 million in revenue in 2019. Now,
Johnson, let me ask you, when you say the revenues, how do you, what's recognized as revenues? Is it that 1%? Is it like what's considered revenues? How is that? What is that based on?
Right. It's, I mean, we don't count the loan amount. It's really just what we make.
It's not the loan. It's the fee. It's the fee.
It's exactly. It's the fees for services. That's what we charge, right? So that's what we recognize.
Basically, so you're doing roughly. It sounds like almost what, like 700 million in loans that you're generating.
Well, it's not us, by the way, right? I mean, we have one subsidiary that is a financial institution, and that financial institution, their revenue represents a small percentage of our revenue. I mean, the interest, right, that the financial institution is charging, but the bulk of revenue really comes from the service fees that we charge for providing our service. So what we tell people that we are not a lending institution. We are a fintech company. We provide analytics. Yes, we do bring leads to clients, but we are a software analytics company, and the fees that we charge for those services is primarily what we recognize as revenue.
Okay, yeah, that's what I was at. So basically, so in order to generate 11 million in fees, you must have done like 700 million, $1 billion in loans that were generated from your leads.
Yeah, from that, roughly, okay. Yes. Yeah.
Okay. So how's the market right now in China? Like right now, you had this, the coronavirus thing happening. Like what's are companies, are they able to get loans? Like what's the lending landscape like? What's the competition like for what you're doing?
Okay. The landscape is the following. I mean, a lot of business. China has, I know we live in an era of internet. Everything is done online. That's all fine and good, but in China, there's still a lot of face-to-face business that is conducted, right? So that will basically take us to the growth aspect of our business, right? So we did this in 2019, right? We generated, we were in 2 cities in 2019. Well, we started doing a little bit of business in Xi'an, but very little. So essentially, we're in 2 cities in 2019, and we wanted to expand our services to different cities and to ramp up the number of businesses and lenders that we can get on the platform, right? So how do we do that? We basically didn't want to continue having 1,000 sales reps. We don't have 1,000 sales reps, but we didn't want to have the model where we would have to employ 1,000 sales reps, pounding the pavement and trying to recruit people, right? So we made a deal with a company called Jinshaar, and Jinshaar is a loan brokerage platform, right? So it's just like our lending hub platform. It is a platform, but what they did is they were specifically designed for loan brokers. And let me explain that, right? So in China, if you are a small business owner and that if you go on your own and you knock on the door of a bank, chances are you're going to get turned down, right? And you don't know where to go. So the small businesses turn to loan brokers. The loan brokers play a vital part in the commercial lending space in China, right? So what these loan brokers do is they do the legwork, right? So they go and they knock on the doors of the small business owners and say, hey, do you need a loan? We can help you get a loan. And they're very, very aggressive, right? So the Jinshaar platform, what Jinshaar did was Jinshaar knows that the loan brokers typically have relationships with 1, 2, sometimes 3 banks or lending institutions. So they themselves are limited in terms of what they can offer to their clients, right? So Jinshaar went out and they created this platform. So they went to the loan brokerage companies and they said, hey, you know what? When you get a loan, when you get a lead, instead of basically just submitting that lead to your 3 lending partners and risking that lead going to waste, because what happens is if the lead does not fit the lending criteria of the 3 lending partners for that particular broker, then it's a wasted lead, right? So the brokers themselves were wasting time and leads by only doing business with 3 lending partners. So Jinshaar said, okay, you know what? We have over 100 financial institutions that are part of this platform that we have. Actually, I think it was a little bit, it was close to about 100 institutions that they had at the time, right? So they went to these loan brokerage platform partners and they said, hey, you know what? Whenever you get a lead, instead of basically just submitting that lead to your 3 partners, submit it through the Jinshaar platform. And we're going to analyze this lead and we're going to try to match it with multiple lending partners, right? And then this will give you a much greater chance of not wasting that lead and earning commission. So Jinshaar, by the end of 2018, they had over 40,000 loan brokers utilizing this platform, right? So they were generating tons of leads, Jack. But the problem that they had is that they didn't have the back-end analytics engine to properly match these leads to the lenders, right? So the leads were still being wasted. When we saw this, we saw an opportunity. We said, hey, you know what? If we take Jinshaar, we implement Jinshaar into the Cubular Lending Hub, given the fact that we have the analytics back-end to properly match these leads, we're going to dramatically increase the rate of matching of these leads. So we acquired Jinshaar at the end of 2019, and this year in April, we completed the integration of the Jinshaar platform into the Cubular Lending Hub. So now we have potentially 40,000 brokers, right, that are submitting leads. All these leads are being fed through the Cubular Lending Hub, and this is how we believe that we can go from 11.5 million in revenue in 2019 to about 40 million in revenue in 2020. That's what we're forecasting.
Okay, so for this year, so your forecast, so for this year, this is 2020. We're already in the fourth quarter coming in. You're going to do 40 million revenues because of this acquisition.
Correct. Like, I mean, this is part of our expansion plan, because remember, our product, okay, is a proven product. There's demand for it. We've established the demand for the product in Wuxi, in Jiangyin, and Xi'an. Now we want to attack some major centers. We want to be in Shanghai and Beijing, Nanjing, different cities, larger markets. And we are looking for Jinshar basically to be the catalyst to help us grow that business. But Jinshar has got relationships. I'm sorry.
Okay, you did 7 million and change in the last quarter, just
in the last quarter, right?
Okay, so that's it's a pretty significant operation. So what's you recently raised some money, like, so what's the fully diluted, how many shares are outstanding? Like what's the at this point, what's the market cap?
On a fully diluted basis, we have a little over 100 million shares issued and outstanding, I would say.
Okay. So you're roughly, what is it, a stock 40? So 40 million Canadian market cap. So it's pretty, you know, it's a reasonable valuation based on, you know, the fintechs. So you're what, trading at 2 times revenue roughly? Actually, one time based on this.
Absolutely, Jack.
1x.
That's why we think the stock is grossly undervalued.
Okay, I saw there was a report that came out, was it eResearch, and I think we're going to put up a link on our website, or I guess people can look at it. I think they can find it online. They have $1.80, I believe, $1.80 upside target on your stock. We're talking Canadian dollars, so $1.80 upside target. So it's like a 4x from here roughly. I went through the report. It's a pretty comprehensive report, and so I suggest anybody read it. Kind of gives like a complete picture. So we're gonna, you know, we're running a little bit behind, Johnson. We've got about maybe about 5-6 minutes. I want to open up for Q&A. So, but I want to ask you a couple of questions, and I want to see if we can grab some audience questions. Here is kind of the main thing. Well, first of all, tell us a little bit about your background and some of the key players on the team.
Sure. I have my background is I used to be a financial advisor, stockbroker, so I know the financial services industry fairly well. Actually studied in the U.S. at Texas Tech University, and I came back to Montreal, did an MBA. And started this company a few years ago with a partner of mine, Liang Q, who is a Chinese national. He's a Canadian resident. He's actually running our operations right now in China. He's a computer science major, very, very smart individual, and he is the CEO, key executive for us over there in China. The business development that's happening, all of the opportunities that we have with the company for growth, it's really mostly it's his doing. He's got a lot of connections, very, very smart individual, able to recognize opportunities before most people see them. And more importantly, what we've done, Jack, is we've partnered with folks in China that have a lot of experience in both the financial services space and the technology space. We're talking about ex-bank executives, insurance executives, technology developers, and so the team in China is very, very strong, and we're looking to continue to build that team. So there's a lot of experience. What we're doing here, we're not doing it basically just on our own. We've partnered with some people that have a lot of experience, that know the space really, really well.
Okay. So yeah, we're going to get to the audience questions. We've got some good questions coming in here. So let's see. What about what in terms of key milestones? What do you have coming up in the next 6 months? Because, you know, people, we've noticed is our audience, they want to see, you know, steady news flow. They want to see progress so that they can monitor, you know, on at least a bi-weekly basis. So what major events do you have coming up that we can sort of keep track of?
Absolutely, sir. One thing to keep an eye on is obviously the expansion of the services to various cities, right? So again, we're in 3 cities in 2019, and our objective is to be in roughly about 20 cities by the end of 2020. So number one is the expansion.
20 cities.
20 cities, yes, by the end of this year.
So you're basically in two. So you're essentially going to go 10x in terms of size.
Correct.
Okay. So is it? I mean, I don't want to put words in your mouth, but is that saying like if you're doing, what is it? Roughly 40 million now, are you going to be doing 400 million in revenue? I mean, like, because basically that's what you're essentially. Is that does it scale up like that, or how does it work?
The expansion that I mentioned, Jack, is factored into the 40 million forecast for this year, right? So the 40 million forecast for this year assumes that we will have expanded our services to different cities, which we've started doing already this year. So we're currently, and we're almost halfway there right now as we speak. I know there's less than half the year left, but we have plans basically to get there. I'm not concerned about that. Now, the second thing that people need to look out for is not just the geographic expansion of our services, but the vertical, the different verticals that we will expand. And what I mean by that is the ecosystem that we've built so far, Jack, has been built completely with brick and mortar businesses, right? So these are businesses that have, existing storefronts in the real world, and they sell products and services. So I mentioned factories in the city of Jiangyin. We have retailers, distributors, restaurants, and so on and so forth, right? All of these things are happening in the real world. We are looking at an opportunity right now to venture into the online world. Okay, when I'm talking online, I'm talking e-commerce stores. Obviously, everybody's familiar with Amazon, Alibaba, right? So in China, the three largest portals, e-commerce portals, are Tmall, which is owned by Alibaba. You have Jingdong, JD.com, and then you have Pinduoduo. Right, so those are the three largest portals in China, and between the three of them, we're talking millions of online retailers, like millions, right? So we have an opportunity right now that we're looking at to get into that space. Now, can you imagine if we start to offer financing, loan capabilities to these online stores? And again, what people need to keep in mind is data, Jack. That's the important thing. We are a software analytics company. We're gaining access to businesses' data, and that data has tremendous value. Not only are we able to match lenders with the right businesses, but there's so much more we're going to be able to do.
So it's interesting. So if you start going after these, the e-commerce side, then you can kind of, the data that you have is you can see what kind of traffic they get to their store. What all is, and obviously the credit card receipts, all that stuff, so you could get better, I guess better lending data. So we're gonna wrap up in 5 minutes here. So I want to ask. Okay, so we'll go to audience questions. I'm not gonna have time to. So Michael is asking, what's the percentage prediction for delinquency this year? I guess he's worried maybe about the coronavirus.
Okay,
situation.
yeah, the loan. Okay,
what's
yes.
The default rate going to be?
Right now, I mean, what we've done is we've taken some, I guess, provisions for loan defaults, potential loan defaults, because as we sit right now, the loan default rate has not increased. Now, the way we measure loan defaults is we measure we say that a loan is in default if it goes beyond 30 days, right? If the borrower takes more than 30 days to pay back the loan, we consider it to be in default. So we haven't actually had any defaults yet per se, but we have had an increase in the number of loan default, the number of loans that have gone beyond 90 days and 120 days for repayment. So we're keeping an eye on that. So, but we don't anticipate that to go much higher than 5%.
Okay, so 5% is still, it's still reasonable, especially, because, I mean, the banks they have a cushion built in with the interest rates that they're charging. I mean, so these guys are charging pretty decent rates. Okay, so Lee is asking, would it be feasible to expect that with a growth strategy of PKK, revenue in 2021 could be working towards a run rate of well over 50 million? I guess he's asking, are you going to be doing over 50 million run rate 2021?
In 2021? There's no doubt about that. I mean, yeah, I can tell you confidently that we expect to go well beyond 50 million in 2021.
Okay, so there's some interesting things happening in the fintech space. I mean, because the multiples that the market's paying for these companies is not like what they're paying for, typical, commercial lenders, banks. I mean, I don't even, what did they go for in China? Like, what are fintech companies valued at? Asia-based fintech companies that, like specifically China.
You know what? I don't have an answer to that. But what I keep telling people, though, Jack, is that yes, we're operating in the fintech space, but I keep going back to what we are at the core. We are an analytics company, software analytics company. That's our core business, right? So everything that all of the services that we provide are based on data. The data that we accumulate, the data that we aggregate, the data that we analyze, right? So that's how we want to be valued. We don't want to be valued as a financial institution. We don't want to be valued as a lender, or maybe even as a fintech to some extent, right? We want to be valued as a software analytics company, analytics AI company.
Okay. Okay, so we're gonna ask two questions, and we're gonna wrap up. We're gonna catch up with you probably next week. We're gonna do a follow-up. We'll have more time. We'll go to like a full presentation. So we got a couple of people asking about further geographic expansion. You did mention something going outside of China. So we got a couple of people asking, what other countries are you going into?
You see, that's the beauty about what we're doing, Jack. I mean, this model can be replicated virtually anywhere, right? So we're proving ourselves right now in China. We have plans to eventually expand to other Asian countries, and potentially, given the right circumstances, we could potentially bring this to North America, to Europe, and other parts of the world easily.
Okay, interesting, because definitely if you can succeed in China, in the lending side, I mean that's a very challenging environment. So that's definitely it's a positive. Okay, so Johnson, I'm going to ask you, the question we always ask at the end of these interviews. Our favorite question here is, in your opinion, what are the top 3 reasons? So top 3 reasons why investors should consider investing in Peak.
Oh, okay. That's tough. I have more than 3, but I'll try to stick to just 3 right now. Number one thing, Jack, is I think people need to understand that this is not a startup. We're not developing a product that we're hoping to be able to sell, right? So there's proven demand. That's the number one thing, right? There's proven demand for a product. We went from 1.5 million in revenue to 11.5 in 2019, and we're forecasting 40 million, right? So that's the number one thing, proven demand for the product. The second thing is just the team that we've managed to put together. We would not have been successful in China if we didn't have a team, if we weren't able to put together a team of experienced individuals that know the space really, really well, that have done it. We're talking years and years of experience in the space, right? So the second thing is the management team that we have in place. The third thing that I'm going to limit myself to is just the sheer size of the market. I mean, as you mentioned, we're in China right now. China's got over 100 million small and micro businesses. And the revenue that we're generating right now, even in 2020, is being generated with about, I would say, about 25,000 small businesses that we're pulling data on and that we're facilitating credit for. So that represents less than 0.02% of the potential market space, and we're generating roughly $40 million with that. And if I may, one last thing, I told you it was going to be very difficult for me to stick with just 3. I'll just throw this one in there for free. I would ask your audience to seriously think about this. The most valuable company right now, I would say in all of the world, is Amazon. Amazon is powerful because they have information. They gather information on the small businesses. They know what businesses need before the businesses even need them. They know what products sell best. So they can offer a variety of different products and services to those business clients that are on Amazon, right? So we are putting ourselves in a similar position where we have access to information that nobody has, right? So the possibilities, and these are, by the way, these are 25,000 clients that we have right now, and we're talking about growing this ecosystem to hundreds of thousands, eventually millions of businesses that are going to be part of this ecosystem. So just think about that for a minute, and just think about the possibilities that Peak has in its future.
Okay, well, it sounds definitely exciting. I mean, you already have a track record here, so which is very important. I mean, you know, you did 7 million last quarter, 40 million is the projection for the year. Okay, so Johnson, we're gonna. I look forward to catching up with you next week. So everybody here is invited to you know, make sure to join us again next week. We'll do like a comprehensive presentation. Learn about all the details, and we'll see you then. Thank you, Johnson.
Thanks for having me, Jack. It was a lot of fun. Thank you.